Good morning and welcome to the Killik & Co market update. Last week we talked about the growing tension between Israel and Iran and about how that had caused the oil price to rise because people were worried about supply problems. Last weekend the US got involved and launched strikes on Iran's nuclear facilities. Shortly afterwards, a ceasefire was agreed between Israel and Iran, and since then we have seen a decline in the oil price. Here's the one-year chart for Brent crude. You can see how sharply it spiked up earlier this month and how quickly it has come down again. We've also seen a drop in the VIX index, or the fear index, which measures expected future volatility. When the index goes above 20, that is thought to indicate heightened volatility. It was up there last week, but it has declined since that ceasefire was agreed. And global equity markets have been holding up well. Here's the MSCI World Index, which you can see has risen this week. The member countries of NATO, the North Atlantic Treaty Organization, met this week and agreed on a new defense spending target. The previous target was for countries to spend 2% of their GDP on defense, and they have now agreed to raise that to 5% by 2035, which is a huge increase. Here's a chart showing past and current spending by country. The dark green bars show spending in 2014, and the bright green bars show estimated spending for 2024. Those two dashed horizontal pink lines show the 2% target and the new 5% target. You can see most countries were far below that 2% target in 2014, but the war in Ukraine has sparked a rise in spending, and most countries are thought to have hit that target in 2024. A 5% target will represent a big increase for every single country. Investors have been keen to invest in defense-related stocks since Russia invaded Ukraine in 2022, and we've seen a number of new ETFs being launched which focus on defense companies. Here's one example called the Future of Defense ETF. The price has more than doubled since its launch in 2023. NVIDIA and Microsoft both hit new record highs this week as enthusiasm for investing in artificial intelligence appears to have returned. Here's NVIDIA. It is a volatile stock. It lost a third of its value in the tariff-induced sell-off earlier this year, but it has now fully recovered. And here's Microsoft. It also suffered earlier this year, but it is now back above its previous peak. These companies are important to follow because they are so large and therefore they have an impact on how the whole market moves. NVIDIA currently accounts for 6.86% of the entire S&P 500 index, with a market capitalization of $3.78 trillion. And Microsoft accounts for 6.71% with a market cap of $3.7 trillion. Please do get in touch if you'd like our thoughts on either of these two companies. Moving on to have a look at next week, we actually don't have a calendar for this week because next week is so quiet and no companies on the Killik covered list are scheduled to report. So that's it from us. Have a great weekend and we look forward to seeing you next Friday.